Welcome to another episode of Boom and Bust. I'm your host, Tony Clement, here at the News Forum where all voices matter. Our next guest is warning against wishing for significantly lower house prices. Be careful what you wish for, he says. To find out why, let's welcome Steve Lafleur. He's a senior public policy analyst who writes for The Hub, a discussion platform. Welcome to the program, Steve.
Thank you for having me.
I guess the first obvious question is, before we get to your argument, what is the state of housing supply and demand in Canada presently?
So, for a long time, there's been a major issue, in particular in Vancouver, or the Lower Mainland, rather, in the GTA, where there has been low vacancy rates, particularly in the core cities, and uh, climbing housing prices. So that's been a long time coming. But then the pandemic came along and really scrambled a lot. You had a bit of a land rush for more real estate because the reality is, for instance, if you've got a couple that both work at home, working out of a one bedroom apartment might not work so well. So it might be time to find a two-bedroom apartment. And you had a lot of people who seemed to pull forward a lot of life decisions. For instance, somebody who might have decided that 2 or 3 years from now was the time to move out to the suburbs. If you have a young family, for instance, all of a sudden it was right now. So we accelerated a lot of trends, and it really potentially, at least in the short term, might have added some fuel to the fire. But the reality is that we've had this structural shortage for a while. This is just chickens coming home to roost.
Yeah, that's interesting. So from your perspective, these trends were already there. There was some acceleration because of life choices during COVID, but there was already a mismatch between supply and demand in your estimation?
Yeah, so it was pretty routine to have rental vacancy rates below 1% in Vancouver and Toronto, for instance. Um, when you've got that kind of market, the reality is that you're having situations where, so for instance, I lived in Vancouver in 2016 for a brief stint, and I was looking for a 6 month lease, not a year lease. I didn't want to have to deal with subletting to somebody else, and I was showing up to showings, and there would be 12 people who showed up, and
Right.
at that point, it's you're not in a healthy rental market because somebody's going to ultimately end up paying more than asking, and that's just you magnify that in the purchase market, where it's even where there is a bit of a speculative element sometimes.
Right. So, why do you say in your article that I did read that the Bank of Canada should not crush housing prices?
Well, so um, I I have no position on what the Bank of Canada is doing. I understand the role that they've got. It's a difficult situation. My challenge is there are people who are kind of wishing for this.
Right. Okay.
There are people you see who have some glee in their eyes when they see the rates going up, financial conditions tightening, and thinking, now's going to be my time. When I really don't think that it's going to work out if it gets to that point the way that they think it's going to.
So, what I guess my question would be then, why do you feel that way? What's the downside?
So the challenge is that if you were to tell me, for instance, that a single attached house in Vancouver was $500,000 next year, think about what that means about the likely state of the economy. Unless somehow there was some miraculous infusion of new housing supply, the reality is that that's a situation where the market is deeply depressed. What does that mean for non owners? It probably means that there's high unemployment. It probably means wage growth is low. Um, Opportunities are low. If you're somebody who's been, sitting on maybe a bit of money, hoping that one day you'd be able to get in the market, well, you better hope that that money's parked in something really unconventional because probably the case is that all financial assets are in trouble as well. So then you think about it. You've got less income, you've got less wealth, prices are lower, also interest rates are higher. Are you in a really materially better situation? Probably not.
And is that a situation kind of nationwide or in those hot markets that you're referring to?
Well, this would be a case, if the economy, if housing prices collapse in the GTA and the Lower Mainland, we would almost certainly be in a pretty bad economic situation across the country. The reality is that these two regions are a huge contributor to the economy. You can't just take all that out of the market and hope that everything will be good. It probably won't. Um, so that'll have knock-on effects for other markets.
Right.
It just seems naive to me that you're going to have this massive short-term that you can have this massive short-term correction in prices and not have downstream effects.
And welcome back to Boom and Bust. I'm your host, Tony Clement, here with Steve Lafleur. He's a senior public policy analyst, and he writes for The Hub. Steve, just trying to unpack a little bit about where you see things are at in terms of housing prices and where you see them going. Uh, New home buyers. So, what's the situation for them now, and what situation do you see for them in the near future?
Well, obviously, a lot of the initial enthusiasm for home buying that happened during the pandemic has died down. Interest rates are going up. So it's possible that'll put a floor on or a ceiling on housing prices for a little bit. I personally am not working with the idea that we're going to have a massive correction in housing. To be clear, I don't think this is going to happen. It's entirely possible that we'll give up some of the gains in housing prices in the last few years, but I think that structurally the challenge is that we've got tight markets in the biggest housing markets in the country, and unless something dramatically changes, for instance, if all of a sudden people stop moving to Toronto and Vancouver, which doesn't seem very likely, um, we're going to have more buyers than we have houses for a while. So it's hard to see a major change in that without some sort of major economic problem accompanying it.
So, still a pretty tight market out there, Steve?
It's possible things will slow down for a bit, but the challenge is that when you think about it, anybody who's a potential buyer or seller rather is also a potential buyer in most cases or renter. So if there's a tight market, they have to find somewhere else to go. And you think about it, if you already own a house, interest rates are going up. Do you want to potentially make a move when you're facing the same situation that other buyers are? Probably not. So there will be a lot of people who just won't end up selling. So it's really hard to see a scenario without some sort of real tail risk where housing materially decreases in the near future.
Let's broaden out a little bit. Where do you see the economy at large and how this intersects with the housing market right now?
Well, um, the reality is that there are tightening financial conditions for a reason. Everybody is concerned about inflation. Central banks are doing what they're supposed to do in that scenario. Um, Nobody's being particularly subtle about it. It's pretty well understood that central banks want a slowdown in the economy, at least in the short term, which is probably healthy. Whether it will go beyond that is, something I couldn't say. But um, I guess the challenge is that there are people who are putting two and two together and saying, well, that is going to lead to low housing prices and things would be great for me. And it's hard to make that math work unless you're, in a very specific situation. For instance, if you're somebody who has, a lot of wealth and who's a renter by choice, and who might say, okay, I wasn't interested in, bidding for a two-bedroom condo, but maybe now that things have really cooled down, but these are marginal cases. I can't tell you what percentage of the population it is, but it's hard to view it. It's hard to imagine it being large, given that you know over half the population already owns houses, and owners tend to be wealthier than renters. So it's hard to see a scenario where a large percentage of the population can all of a sudden leg into the housing market because houses go down. So
Got it. So, one of the things that's been noted by analysts is that housing plays and investing in housing plays an outsized role in our economy, and that so the ups and downs of housing prices has a huge impact on people's net worth and their ability to, affordability, those kinds of issues. Do you have any comments on that?
it certainly is true. People often talk about Canada as having basically being an economy dependent on oil and gas and housing. And there's something to that. These are both big contributors to the country, and housing in particular in Toronto and Vancouver are major parts of the economy. Uh, the one problem with that, though, is that in some ways it's not big enough in the short term because we do have these structural deficiencies and we do need to do something about it. If we keep building housing at the rate that we're building it currently in Vancouver and Toronto, we're going to be in a lot of trouble because it's
Right.
just not fast enough. The provincial government in Ontario, for instance, had a housing panel that, if I recall correctly, called for doubling the supply of housing over the next 10 years, or the supply or the number of starts over the next 10 years. That's a big change. So in some ways, as much as it might be unhealthy, we almost need to do more in the short term just to catch up.
Got it. Steve Lafleur, we're going to continue with our conversation. We're going to take a short break now. Please stay with us. We'll be right back. And we're back here at Boom and Bust. I'm your host, Tony Clement, here with Steve Lafleur. He's a Senior Public Policy Analyst writing for The Hub, and we're talking about how the housing market, housing supply and demand and cost and so on. Just finished talking a little bit about the role that housing plays in the economy. Steve, maybe take us through a little bit of how that's also connected to how it impacts on macro demand, business resilient. There's a lot of moving parts in our economy. Any thoughts on that?
Well, there are a lot of moving parts, and one of the challenges in a situation where we have inflation running well above targets is that we need tightening financial conditions, which means uh, higher interest rates, which means higher borrowing costs for housing. So housing ends up taking a lot of the brunt of that. Um, and in a scenario where we went too far, it could have knock-on effects because there's so much wealth invested in housing. So, for instance, you think about most families, their biggest asset is their home. And all of a sudden, if your home values were to go down 40% or some very large number, all of a sudden you're probably spending less money. And when you're spending less money, that means that certain parts of the economy, for instance, the service sector, all of a sudden have less revenue. Less revenue in the service sector means less jobs in the service sector, and so forth. So, if you were to get into a scenario where you had these, gigantic declines in housing value that people are looking for, you would get some pretty big trouble.
Um, let's rewind the clock a little bit because I think one of the things that's interesting about this is we had a similar situation and dissimilar at the same time in the U.S. I'm thinking 2008 and the financial crisis there they had a big bubble in their housing market in a lot of cities like Denver and so on. Take us through that scenario. What is similar about the housing bust in the U.S. In 2008 to 2010, and what is different about it?
Yeah. So any scenario that involved a large collapse in prices would have some similarities to that. What isn't similar is that we don't have, you know, well, I shouldn't say we don't have, but there's no sign that there's any kind of reasons why the financial system itself would be vulnerable at this point. However, a lot of the dynamics that played during the financial crisis could similarly play in that. So you have falling housing prices, people consume less, and then all of a sudden that has cascading effects beyond your borders. So, for instance, one of the books that I lean on in the article, it's called House of Debt. What they found was that if you look even before the financial crisis started, you had some slowdowns in consumption that impacted, for instance, factories in places like Wisconsin. And then after the financial crisis, you had like car factories, for instance, in Tennessee that were affected because people were buying less. So housing plays a pretty big role in determining how much people are willing to spend.
Gotcha. Uh, now, are they? Is this something that is going to affect? We talked at the beginning about how this affects Lower Mainland and Toronto, for instance. Do you see it having the current uh, price fluctuations? Do you see that happening outside of those cities as well?
Well, if we did get into the kind of scenario where we had really deep housing price corrections, it could. So, for instance, you think about it, recreational vehicles is one example. They're not built in, Toronto or Vancouver. They're built in, well, somewhere in Quebec. I think Quebec City, maybe. So all of a sudden, you think about a factory like that. All of a sudden, they're building less, therefore they're laying people off, and then it spills over. So any big, deep correction would have all kinds of cascading effects that we haven't really thought about. Um, the reality is that manufacturing isn't a thing that happens in downtown Toronto. It doesn't happen on Bay Street. It doesn't happen on Granville Street in Vancouver. It happens in other parts of the country. So, there are all kinds of unpredictable effects. It's not just the Toronto and Vancouver situation. And frankly, even for the long term health of the country, I worry that, the specific problems in Vancouver and Toronto are problems for the whole country, productivity wise.
No, that's a very good point. Obviously, Toronto and Vancouver are not islands. Economically, what happens there does have an impact. A lot of people work in those cities but live somewhere else, or have business or economic interests that can be impacted by that. We're going to continue to talk about this with our guest, Steve Lafleur. He is a senior public policy analyst, writes for the Hub publication. Right after this break, we'll see you after the messages. And we're back here at Boom and Bust. I'm your host, Tony Clement, here talking housing policy and the housing impact on our economy, the cost of housing, all of those things with Steve Lafleur. He's a senior public policy analyst. Steve, want to get back to housing supply. You referenced that earlier in our interview. How do we get the supply of housing up in this economy?
Well, so there are a couple of challenges. There are land use challenges, and then there are broader challenges with access to labor, materials, and so forth. The first one is a little bit easier. Basically, you've got a growing metropolitan area like Toronto or Vancouver. You can do two things or a combination thereof. You can build upwards, intensify the existing footprint, that is, or you can build outwards, so have more subdivisions and so forth. In both the Lower Mainland and the GTA, we've decided that we're going to largely prevent sprawl from happening, which is something you can do and have a healthy housing market. You can do, but you need to do other things. You need to allow more intensification. The trouble is that we've got mismatches between what the provincial governments and the municipal governments are doing. So if the GTA and Toronto specifically were to have had a healthy housing market after the Greenbelt was imposed, it would have required City Council in Toronto and other municipalities around Toronto to really aggressively upzone some parts of the city, not just towers everywhere, but townhouses and three-story walk-ups. Frankly, the kind of things that you see in older parts of, in older cities and older parts of Canadian neighborhoods, like where I live in East Toronto, where you've got rows of townhouses, you've got six-story walk-ups like where I live, and that sort of thing. But most of the GTA is just zoned for single detached houses.
Right. Right.
So you need to change that.
Yeah. So, that's under the purview of the municipal governments, right?
That's right. And so there's this mismatch between what the provinces are imposing and what the cities are doing, and that really has not been resolved.
And let's call a spade a shovel here. What are the reasons why the municipalities haven't been engaged in intensifying their footprints?
Well, the reality is that everybody wants there to be enough housing, but a lot of people don't want it to be in their backyard. And the trouble is that, think about it from a city council perspective. If there's a building going up in your neighborhood, a lot of neighbors are going to yell about it. But you don't hear a single thing from the rest of the city, let alone the rest of the metropolitan area, because they don't have a vote on that. So there's this mismatch where the provincial government sets a framework for the whole province, but then you have to rely on, local city council are worried about, 10 people yelling at them. And that really slows things down.
And is there any way, I mean, you're trying to, I'm looking at two different sides of the argument here. You've got people who have invested in their own houses that are worried about the degrading housing value if there's intensification, I suppose, versus the need for more housing for people. If you care about your kids or your grandkids, perhaps you'd want to see more housing. Ideally, is there any way out of this public policy conundrum?
Well, there are trade-offs. I mean, the reality is that there are winners and losers in everything. There are winners in a supply-constrained market, and some of those winners will end up taking a haircut if we upzone. However, a lot of these things are ambiguous property value-wise because if you've got, say, for instance, you're in a neighborhood that's adjacent to public transit, and the neighborhood's upzoned, there's going to be demand by developers to build, more dense housing, and they're probably willing to spend, a decent amount to buy out houses in order to do it. So it's not entirely a loss, but things will change. And people talk about the character of the neighborhood as though it's some immutable thing that never changes. It's always been this way. It always will be, even if the houses have only been there since 1990. The reality is that neighborhoods change. Neighborhoods can change the way they are in Toronto right now, which is they're getting less populated because people, their kids are moving out and they're empty nesters, and you've got less people than can be supported by the infrastructure, or you can acknowledge that and make some changes at the margins. And we're going to have to do that at some point. And I think, honestly, provincial governments are really going to have to take leadership on that.
With that, Steve Lafleur, we want to thank you for being on Boom and Bust. Very interesting conversation, very thought-provoking. It's been a pleasure having you.
Thank you for having me.
Interesting discussion with Steve Lafleur there. A lot to take in terms of housing prices, housing supply, housing demand. A lot going on in our economy that affects you, of course, whether you're a homeowner or a renter, it affects you. So thanks for watching our program. Hope you enjoyed it. We'll see you next time.